Hej, välkommen till Börslunch på efn.se. Ja, nu sitter vi här igen för tredje dagen i rad på Nasdaq i New York och det är vår sista dag här.
Och idag har vi två riktiga tungviktare med oss. Vi har den svenskbekante David Marcus som är chef för Evermore Global Advisors och Nasdaqs egen chefsekonom Frank Hatheway. Welcome to our last show here in New York.
Thank you.
Frank, starting off with you, could you just briefly tell us a bit about yourself and your role here at Nasdaq?
Be happy to, Jesper. I'm the chief economist here at Nasdaq, senior vice president. Been here approximately 14 years. I've got a background as an academic before that. I've worked in the U.S. securities regulator. Way back I was a trader in derivatives. Essentially what my group does and what I do here, we're internal consultants. So when Nasdaq wants to make changes to the way the market works, or if an issuer has questions around what's happening with their stock, or the CEO wants to talk about what's happening in the economy of the United States. That kind of thing my group does. Yes.
David Marcus, you've done many investments in Sweden during the years. Can you tell us what you do now?
Sure. I'm the CEO of Evermore Global Advisors. We're based just outside of New York City in New Jersey. We are special situations investors, and so that means that we're looking for companies that are misunderstood, where there's restructuring, breakups, spin-offs, turnarounds, strategic change going on. And so we invest anywhere in the world. We just look for things that are not well focused on by investors. I've been investing in Sweden for over 20 years now. One of my favorite places to be. And there's always opportunities everywhere, and the key for us is to just be relaxed, be focused, and have what I would like to call aggressive patience. So that means that before we buy something, we have nothing but patience. Once we buy it, we have no more patience. We want to see it work. We want to see the company do exactly what they said they would do, and not say one thing and do another.
We're going to talk about some of those misunderstood companies later on the show, but starting off with you, David, turbulent market. It's been up and down in past months. How do you look at it right now? Where are we in this market?
Well, for us, we look at this as a great opportunity to buy positions, to add to positions. When investors start to get into that panic mode, when they start selling stocks without thinking about what they're selling, they just want to get out, that's usually when we want to get in. So I think of this as what I call a nibbler's market. Nibble meaning take a small bite. So if it's a bad day and I can take a small bite, I still have capital to come back another day. So I don't take the biggest bites because then I might not have as much resources to keep coming back. There are fears of whether it's China, whether it's whatever issues are going on out there, emerging markets. But the fact is there's always a crisis, there's always a fear, there's always a panic. And the key is to just step back, focus on the individual companies, and understand how they might be impacted by those big issues, but really focusing on those companies, especially the ones that investors don't understand well. And in some cases, we can buy stakes in what we love the most, which is family or individual controlled companies, where you have a real dynamic leader at the top, and the market just lumps that in with everything else. It doesn't really focus.
Frank, where would you say then that we're standing right now in this macro environment?
Well, it is, I won't say a crossroad because I don't think it's that dramatic, but we're at one of these points where there's probably more uncertainty being created by government actors than the private sector or business investors like David would really like. We would like to see some clarity from the U.S. Federal Reserve around what their policies are going to be, so people who run businesses, who drive the economy, can get on with what they do. And if I can draw a parallel to a few years ago, we had a significant amount of uncertainty around government spending and tax policy here in the United States in early 2013. The end of 2012, there was a lot of economic activity driven by potential tax avoidance. People were taking income early. 2013, we had spending cuts, we had tax increases. It was supposed to be the end of the world as we knew it. The economy grew a little more slowly than it had been for about 6 months. And then people in the economy got on with what it is that folks who run businesses do. Essentially right now we're waiting for
the rate hike.
We're waiting for a rate hike. We're waiting for clarity on what the rate hike and all the implications around it will be. then we can get on with what we do. And it may mean less opportunities for you once it's over with,
Right.
but between now and then, you may have some more opportunities.
Exactly, and so that's an issue, which is once there's clarity,
Yeah.
well, the prices are higher. So when it's not so clear, that's the best time.
If you
for
look
us.
at the consensus right now when it comes to the rate hike, most people, now, majority seems to think it's going to be in 2016. But we get a sense that a lot of people want it now. Again, do you agree? Is that the best with clarity?
There's a perspective,
Yeah.
just get it done, get it
Get
over
it done,
with.
yeah.
But the fact is, when you look at corporate earnings,
Yeah.
it's not robust. So just today, you had here in the U.S. Walmart having some announcements
Profit warning,
of
yeah.
profit warning. You've had a couple of companies in Europe, especially in Germany, industrial businesses, kind of falling short just in the last few weeks. And so globally, it's sort of faded a bit, the recovery. And so people want it, but guess what? The consensus is rarely right. Just because they want it doesn't mean it's the time to do it.
How
my
bad
view.
is it that a company like Walmart is doing a profit warning? Because isn't it the U.S. consumer who's going to lift this? As industrials is so bad because of China, everyone is counting on the U.S. consumer to lift the economy. How bad is a profit warning from Walmart?
Well, without going into specifics of a company, because I'm a regulator and David's an investor, so I have to be a little careful there. A slowdown from the consumer across the board would be significant for the U.S. economy. Consumer still is a very large part of the U.S. economy. I think the Walmart situation is both a combination of their own unique factors, changes in what's going on with the consumer, and this potential significant change in the composition of the U.S. labor force. A number of people have talked about labor force participation over the last months and maybe even a little longer. The labor force participation is low. This is the number of adults, essentially our ages, who are working, is at the lowest level it's been in approximately 30 years. No one knows why. Is that a problem with the statistics? Or is it a change in how people want to spend their time? If you don't want to spend your time working, okay, that's fine, but it does mean less disposable income, and for Walmarts and many other companies, there could be a very significant implication. If it's something about the statistics, it goes away. And this is sort of one of the big unknowns that we're not going to have resolved by the time the Fed acts, whenever the Fed acts, because these changes are very slow to take effect and very glacial.
If I would add to that, just the U.S. is still the largest market in the world for virtually every product. And so if there is a slowdown, it's really, that's sort of what it seems to be. I'm not an economist. I don't look at it from that angle. I always look bottom up. But a slowdown doesn't mean it's over. It doesn't mean the game ends and everybody should just go hide in a cave. Sometimes it's just a pause. I will tell you that in our fund, we're global. We can go anywhere. Today we have almost 65% of our fund in Europe. We have barely 20% in the US. 2 years ago, we had 35% in the US. So we've been selling the US holdings to buy Europe because you're actually seeing a pickup in a variety of areas in Europe. But remember, they're coming off of such a low base of decline. So just the little bubbling up they're seeing is small. And even for them, a lot of their products are coming here, not just going to China or other parts of Asia, but the US is a big consumer of items coming out of Europe.
And if you look at the numbers from the US, the manufacturing is sort of going down or leveling off, but the service sector is the one that is. So going back to Charlotte's question, is that how bad is it that manufacturing is actually weaker, since it's a fairly small part of the GDP these days?
It's not unexpected, so in that case, it's not bad. So we talked a few moments ago about Fed timing.
Yeah.
When the international central banks cut interest rates, put in their own forms of quantitative easing late last year, that had many of the same effects here in the U.S. as an interest rate hike would have had in the U.S. The value of the dollar went up, manufacturing particularly, whether it be in the export industries or in an industry where there are import substitutes, felt the negative impacts of the more valuable dollar. And so there's nothing in terms of the slower growth in manufacturing or manufacturing employment that wouldn't have been anticipated a year ago. I think one of the positives there, it's not been worse than it has been. It's not likely to get worse than what we've seen so far. And then more broadly, how important is manufacturing to the economy? Well, value creation, however you do it, is what an economy depends on. Manufacturing is still part of that. Resources are still part of that in the United States. I mean, we are in many ways a resource-producing economy, even though we don't get thought of that way. Now, of course, Nasdaq and the types of companies that list here, we're essentially in the knowledge business. Many of the companies who list here employ knowledge workers. It's not going to be sensitive or even not going to be the opportunity for people who have been in manufacturing jobs to move into those kinds of jobs. So at the individual level, it's a challenge for the people who are affected. But for the economy as a whole, I agree with you, Jesper. It's really not that big a deal, both because of scale and because of really what you could see coming when the dollar appreciated as rapidly as it did the fourth quarter last year.
But that's also an issue, which is the strong dollar. It just makes the U.S. products less competitive globally. And so for me, that just reinforces that, again, Europe. So why is the environment teeing up well for Europe? Low currency. So weak currency in Europe generally, depends on the country, but let's just say generally. Energy prices having collapsed. So manufacturers have just a lower cost for energy. You have this push for quantitative easing from the ECB and other entities. And you're starting to see them pick up little bits and pieces of growth. And then in the countries where there's been really more of a crisis, not really in Sweden or Norway and other markets there, but when you get into the France, Germany, Spain, Italy, Portugal, whatever, the fact is the rules and regulations are changing so much and have changed that they can restructure, they can close plants, they can downsize the headcount, they can become much more competitive than ever before. And if it wasn't for the financial crisis in Europe, these companies could never do that. And so the crisis creates opportunity. And while most investors are looking around and thinking, boy, when is it going to be clear? When will that whistle be blown, all clear, go in? It's too late. You have to go in when it's cloudy. It's still cloudy now, just like we're talking about here. There's so many difference of opinions. That's when it's trading here. When it's all clear, it's way up there. That's when I want to sell to all those smart guys.
So you should have entered Europe. You're talking about also finding opportunities in Sweden. Your friend Ed Lugo, he was here 2 days ago. He said there are opportunities in Europe, but he thought Sweden was a bit too expensive. What do you find in Sweden?
So we have two investments in Sweden today of any real size. The first is a company called Lyfta. So that's run by Carl Bennett, who I think is one of the most talented value creators, not just in Sweden, but just period. And I don't think investors really outside of the Nordic area really understand what he's done over the years, but he's really created a lot of value for shareholders. This is a little conglomerate that they IPO'd last year, less than a year ago. It's almost doubled in that time. So we got involved on the IPO. We almost never buy an IPO. But if you can buy Carl at a discount, he does all the work and we can sit back and relax while he's doing it, we're getting him really cheap. And so even though the stock has doubled, they just are good value creators, what I would call compounders. So Lyfta is a large holding for us in Sweden. And then
Would
we
you
also
still recommend people to buy it? Because they've done a great job up until now.
Yeah, look, I hate to recommend somebody to buy an individual stock. It's not really what I like to do. I run a fund. But I would tell you, we have not sold any. I love it. I expect to own it for many years. I look at it as what I call a compounder, that we need to own for many, many years. I don't think it's obviously not as cheap as it was previously, but nor is it too expensive. I still think it's worth well more than it's trading at today. So rather than giving a specific recommendation, I would say I like it a lot. And if anything, I'd be more of a buyer than a seller. I'm not a seller. And then the second one that we own is a company that's kind of a quirky kind of a business. It's just a bus company. It's called Nobina. If anybody's taken a bus in Sweden, they may have been on one of these buses. They have 3,000 buses and all these different routes. Busing is kind of a weird business in that the customers are the municipalities. And so generally, but when you sign a deal, it's like a 7 or 8 year deal. So if you sign a bad deal, you're stuck in it for 7 or 8 years. And so the management team came in 2004. They really only in the last 18 or 24 months, if that, are able to sort of do a better job at managing these contracts as they roll. It's really a long time.
That was also an IPO.
Mm-hmm. Yeah. So actually,
and going back to the misunderstood companies.
Yeah. So there was a big sort of outcry in Sweden
Yeah.
about this company because of the management's compensation, how they're going to deal with some debt that they have. They used a chunk of the money for the debt. There was also some sort of recap of management.
I don't think we had one guest on our show that liked the stock when it did the IPO.
Yeah, that's fine.
That's perfect
if
for
you
you
had
then.
more than one guest who liked it, I probably would not have wanted to do it. I like to buy the weak IPO, the busted one. It's trading a little bit below where the deal was priced today, and we've added along the way. You're getting over a 7% dividend yield, so you're getting paid while this slow transformation occurs. I don't think this is a stock that's going to double or triple, but I think you're going to accrete value as they roll the contracts, bid for new projects. I think they have a very good management team, and I do think investors, as they get to see this as a public company, as a quoted company, will better understand the value here. And I think that the noise around the IPO was good because that allowed us to get in an attractive level. So I do like it.
What do you say? Last time we met, Frank, almost a year ago.
Yes.
You liked the North American development and the macro environment. You were not too optimistic about Europe back then, if I remember right. What do you think? It sounds like David think Europe is a better.
Well,
what do you think?
We've had between last year and right now, we've had some turmoil in Europe, and we're through it. And congratulations to both of you for getting through it. David undoubtedly was buying in the middle of the turmoil, and I wasn't. But I think I do agree with him. The European economy is poised to do significantly better than it has been over the last few years. Quantitative easing is behaving the way it does. Now, quantitative easing, in my view, is always a short-term policy. So we have a few years to benefit from that, and then it's going to come to an end. And you get the pushing on the string metaphor that's used here. I have no idea if that will translate for your viewers or not. But the basic idea that you need to have positive NPV type of activities undertaken by the government, undertaken by the private sector to drive growth. Low interest rates don't guarantee that will happen. But certainly in the short run, they help the consumer, they help businesses, they help the price of assets. So 7% dividend yield on a bus company sounds absolutely terrific. The target rate is negative on government funds, but overnight money. So, in the near term, I think the outlook for the European economies, Nordic economies, any of the economies in particular where you're export driven outside of Europe and the low value of the euro, as David was saying, can benefit you. And you're running an efficient company, an efficient economy. It's going to be a pretty good outlook in the near term.
I think I couldn't agree more. And when you add to that the low rates, so it's not just companies that have stretched balance sheets. Any company with any debt, the fact that you can refinance your debt and save 100 basis points, 200 basis points, whatever, it's real savings. And you're at maybe 100-year low interest rates in Europe, maybe, I don't know, maybe longer than that. So when you add that to all the other sort of bigger picture items, I think it is very powerful for these companies. But if you think, when you get out of the Nordic region, about heavy industry in Europe, if you think of a fat company that goes on a diet and becomes a skinny company, and then they get even a little bit of sales growth, it's very powerful to earnings. And you've had a lot of companies going on diet. Not everybody's doing it, but a lot of the old line heavy industrial businesses, as I said before, are really using the crisis to make changes that they could never, ever do beforehand. And so they are taking advantage of the opportunity, and I don't think it's still well into the stock prices yet. So there's plenty more for us to focus on.
Can I ask you, David, now you've mentioned Lifco and Nobina, but you were at the board of MTG up until 2-3 years ago, and you have a close relationship with Christina Stenbeck since many years ago. Why don't you invest there, and what's your opinion?
It's simple. My plan always was, because I was on the board, I would never invest in any of the group companies. And I just think it was always clean and keep it separate. I think that she's done a fantastic job. I've known her for a long time. I have nothing but respect for what Christina has built and how she's transformed Kinnevik and all the related companies. It's been absolutely remarkable. So I think they're great companies. I think that now that we have sort of separated that I'm not on the board, it gives me the ability that I can look at those companies. And I would say we don't own any of them today.
Too many like them.
It's not crazy to think that one day we would own it in our portfolio, because we are really fixated on finding great individuals or families that control businesses that we can invest with. And as I said before about Carl Burnett, they do all the work, they're creating all the value, and we ride on their coattails over the years. So even though, as I said at the beginning, we do special situations, the other part of our portfolio are these family businesses where they truly are compounders. And I think that Kinnevik is one of those, and they've created an enormous amount of value over the years. And I think that she's done a fantastic job. So I think it's excellent. So no other reason except a legacy issue. And then today I would say, watch this space for the future.
And when it comes to the future, in the past year we've had a number of IPOs in the Swedish market. Some of those you apparently like. It's been a bit slower in the US in the past months, right?
This year is going to be a little slower than 2014 was in the US.
And since you're on Nasdaq, you have to tell us what your thoughts are on the IPO market.
Well,
what do you tell as the macro consultant?
Exactly. The short-term reaction is I'm very pleased and surprised the IPO market has reopened here in the early part of the fourth quarter. We had a tremendous amount of volatility in the markets in August. That usually means about 9 months before the IPO market can get going again. Yeah. There's a lot of caution. And that's not really been the case. 4 IPOs on Nasdaq last week, 5 scheduled for this week. There's 1 today, 2 IPOs scheduled this week in the Nordics. So the IPO market stays open. Now that may say something about stock market valuations that's not necessarily ideal for David and his ability to go bottom fishing. But the IPO market from our perspective, good here, not great, but good, and the Nordics very good, and you have these companies coming out who have potentially transformative concepts in what they do. Now, it's an IPO, they're risky. None of these things are certain. The majority of them probably won't work out. That's the nature of IPOs. But some will. And you have these biotech companies coming to market and other types of companies that, as the years unfold, we may really see that there were some tremendous opportunities here for people who are willing to spend the time and understand what these companies are all about and what their products potentially could do, as well as recognizing the risk.
So fairly optimistic then.
Oh, yes.
Yeah.
I'm an unusual economist. I try not to be all gloomy all the time.
Wow, perfect.
An unusual economist, not the gloomy type.
I thought it was like 50-50.
No,
One hand, the other end?
The few that I've gotten to know are generally very gloomy. You seem to be
Really?
the odd man out. And most of them have called 10 of the last 2 recessions. You know, it's always the end of the world for those guys.
Yeah.
So,
There's always things.
welcome to this side.
Thank you. Yeah.
So we're not at the end of the world yet, just yet. Sounds good.
I don't think we are. I
And
think
if we are, David
it's
will
early in
find
the game.
opportunity then.
That's right.
Excellent.
Tack så mycket för att ni har varit med oss här på Nasdaq i 3 dagar. Vi kommer att vara tillbaka i Stockholm redan imorgon, 11:15 som vanligt. Se oss gärna då. Thank you very much, gentlemen.